So this question is about when you have a foreign loan. All right, now a foreign loan is basically a foreign monetary asset. And when you've got a foreign monetary asset, what you have to do is you have to translate it. Okay, when it's a monetary asset. Non-monetary ones you don't. You translate it at the start, but you don't translate it after that. But foreign monetary assets we do, and that's what a foreign loan is. Okay, so let's have a look at this loan then. It's a loan of 5 million dinars. So I'm going to do it in dinars first. 5 million dinars. Interest rate is 8%. So 8% of 500 of 5,000 would be 400. Yeah, the interest is paid at the end of each year, so paid at the end 400, and that will give a closing of 5,000. So very simple loan. It says the loan will be paid after 2 years. The interest rate is the current market rate, so we know that the 400 is the effective rate. There's no need to adjust the opening or anything. Nice and straightforward. So what we've got to do now is really just translate those figures, really. So the opening, we'd use the opening balance of 5, wouldn't we? So we divide it by 5, and that would give me 1,000 in our accounts. The interest then that would go to the income statement as a payment, well, that's interest that's happened all the way during the year. So use the average rate there, 5.6. So 400 divided by 5.6 is 71.43 going to my income statement as interest paid. Then I'll pay it off. This was paid at the end of the year, the interest, so I have to divide that by 6, so that was 67. And then finally, at the year end, I have to retranslate my monetary balance. So again, year end rate of 6, which is 833. Now, obviously, that won't all add across because there's exchange differences going on. So you have to work out what the foreign exchange difference is here. So the foreign exchange difference caused by all of this. So 1,000 plus 71.43 minus 67. Compare it to the 83, and you should get a difference of, I'm going to have to work it out myself now because I've forgotten. So what have we got? We've got 1,000 plus 71.43 minus 67 minus the 833, a difference of 171.43. Okay, and that is our foreign exchange difference that we will have to put in our income statement. All right, so not a foreign sub, this one. This is just a foreign monetary asset in our own accounts. Well, actually, it's not a monetary asset, is it, in this case? It's a foreign monetary liability, but the same thing applies.